At which point of the decline should you buy Bitcoin spot positions? If you're interested in knowing more about this, please keep watching. On Bybit, I've shorted 200,000 US dollars in Bitcoin and 250,000 US dollars in Ethereum. Given the current unrealized profit, I've earned more than 9,000 US dollars from Bitcoin. As for the realized profit, which related to the funding fee, the rate appears positive so far. That means you will receive a small amount of funding fee if you go short. The profit from Ethereum is less. Anyway, the overall return is around 16,000 US dollars. I think it's quite a promising return. If you want to make a profitability trading on Bybit, I highly recommend that you click the link below. Bybit and I have partnered on a promotion in which you can receive a 1,000 US dollars worth Ethereum position after completing KYC and making a 500 US dollars deposit. Just click the link below and you'll be directed to this page. After completing KYC and making a 500 US dollars deposit, you can choose a free Ethereum long or short position. That's 1,000 US dollars worth. This is a sweet deal. You can do anything with the money after making a profit, like withdraw the money or something. It's fine if you incur losses. Since it's a free position, you can still withdraw the initial deposit fund. Alright, let's get back to the Bitcoin market. Let's start with the weekly candlestick chart. Before we decide on buying the dip on the weekly chart, we should know about something. Has the current bullish trend come to an end? This is the key. The decision on buying the dip depends on whether or not the current bullish trend has ended. In this bullish trend, there's a preparation phase formed here. Right down here. It's not good to color it red, which will cause misunderstanding. I'll color it green. The phase is right here. The span of this phase is considered quite long, 273 days. And the trading volume accumulated is significant too. Before we see a qualified distribution phase up here, the probability of this temporary bullish trend ending is low. As of now, we can't see a distribution phase formed here. It's not evident yet. Hence, it shows that the bullish trend is still developing. At least, in the predictable future, it's less likely to announce an end to the ongoing bullish trend. As you can see from the previous temporary bullish trend, when a distribution phase is formed up here, it indicates the end of the bullish trend. It's then followed by a consolidation and the market downturn on March 12th. The price action never goes up since then and stops between 12,000 US dollars and 9,000 US dollars, which is a congestion area. Afterward, a bull market starts. But there's a distribution phase. In the current temporary bullish trend, you can notice that the distribution phase isn't evident enough and hasn't formed yet. Therefore, the current temporary bullish trend hasn't come to an end, I think. At least, concerning the current trend visible to us. We can't see any obvious factors implying the end of the uptrend. Let's take a look at the accumulation phase down here. Before an uptrend, there's always an accumulation phase, rendering time for the operator to get ready. The green area indicates the phase for them to get ready. This green area is where the operator slowly accumulates BTC. When the price action falls back on the phase, it should rebound instead of going straight down. If the price action can't stop between 24,500 US dollars and 25,000 US dollars, I think the bullish trend is very likely to end. If this is a healthy bullish trend, when the price action falls back and is about to touch the rectangle, it should trigger the next bull run. It shouldn't break below 25,000 US dollars. If the price action falls between 24,500 US dollars and 25,000 US dollars, I'm considering buying spot positions. Here, if the price action falls back on the rectangle or undergoes a consolidation before touching the rectangle and then launches the next bull run, it's the most favorable situation for a bullish trend. The best thing for sure. However, if the price action breaks into the rectangle, I think the bullish trend has become weak and suspicious. Actually, the mentioned situation has occurred several times before. For example, at this point, At this point, there's an accumulation phase formed down here. Did you see that? It's a preparation process before the bullish trend. After that, a bull run is triggered. The upper boundary of the rectangle serves as a support because the operator builds a trading range below. In that case, there's no way the price would fall into the range again, letting other traders, like retail traders, accumulate stocks within this range. That's impossible. So, price action mustn't break below the rectangle. As corresponding to the current market, it's around 25,000 US dollars to 24,500 US dollars. I think the price action should rally up. That's to develop into a bull run before touching the rectangle. Still, we need to observe the market around 25,000 US dollars before we make any decision. Given the current trend, I think the probability for the bullish trend to end is low. At least, there's no convincing evidence to announce its end as of now. Actually, the price action in this period is very similar to the ongoing one. It's just that it's an inverted version. This is a distribution phase. Let's examine this distribution phase. This phase lasts pretty long. To undergo a bearish trend or consolidation, or to terminate the temporary bullish trend, it needs a range here, since this is the main selling zone of the operator. Before a large enough preparation process is ready, if the price action returns to the rectangle, it won't stay long. It just won't stay long. Look over here. Can we go short here? Yes. Because the price action hasn't undergone a preparation phase before uptrend testing. The same thing applies to this. Let's go back to the current trend. And everything is open and shut. Whether or not the price action can continue to rise, it depends on the situation of the test at around 25,000 US dollars. If the price stays here, it's very likely to have a bullish trend. If otherwise, it will pose an extremely high risk. Let's switch to a smaller time frame. The daily candlestick chart. I reckon the ongoing downtrend is actually a retracement. Why? Look at the uptrend over here. It's continuous with its trading volume, and that proves that this is a bullish trend. A powerful one. The uptrend here is a motive wave. The retracement here is a corrective wave, followed by an uptrend, which is a motive wave. Including the uptrend here, it appears continuous. Also, the trading volume is significant. You can notice the previous retracement and the current one. Its trading volume is very different compared to the two bullish uptrends we mentioned earlier. Besides, there's no trading volume shown during the downtrend. Therefore, unless there is a larger surge in trading volume compared to the previous one, or a significant change in price and trading volume, I consider the downtrend as a retracement. Let's switch to the 4-hour candlestick chart. As you can see in the 4-hour chart, the ongoing downtrend is always powerful for short positions. So, the idea of buying the dip at the support isn't considered wise, especially when the price action rebounds. You can notice there are several rebounds that occurred at these 3 points. These 3 rebounds are accompanied by a significant reduction in trading volume. Especially now, the trading volume shrinks during weekends. If we observe the market on Saturday and Sunday, we can see a drop occurred precisely when the CME market opens, where it's the normal operating hours in the US. During Saturday and Sunday, all of the price movements don't count. If we take a look at the closing price on Friday, it was 27,300 US dollars. Right? So, the price action is likely to come back to 27,300 US dollars on Monday. This short uptrend is merely a rebound from the previous drop. A small-scale rebound. It's not a serious threat. Lastly, let's take a look at Ethereum. Actually, in the market, the price action has rebounded several times on some support levels. However, judging from the rebounds, it appears to be powerless. It's quite powerless. As you can see, the price action touches the resistance over these 3 points. and then touches the line again as support. The level does hold it for a while, but it's broken below soon after. In the earlier period, this is also a role reversal. Right at here, the price action touches the resistance 4 times, and the line turns into support here. At this point, the price action bounces off the support. But this rebound is followed by shrinking trading volume, even till extremely low. In my opinion, this point is indeed a support. However, I won't go long here. Alright, thank you. You're welcome to like and share my videos. And subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.